Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start a new subject, income tax, for the assessment year 21-22. Earlier also I have uploaded the videos on income tax for previous assessment years like 2019, 20, 2021. Now I'm going to continue for current assessment year 21-22. I got so many requests from my regular students to upload the videos for the current assessment year. So I've decided today I'm going to start continuing the uploading of these videos for income tax assessment year 21-22. So before going in depth how to compute the tax, how to calculate the tax, first of all we must know the basic fundamentals of tax. So in this video I'm going to explain you about the meaning of the term tax, characteristics of tax, objectives of imposing the tax, classification of tax, different types of taxes, canons of taxation, and tax structure in India. These are the basic things every student must know. And apart from that, in examination, a question will be asked regarding the characteristics. What is tax? What are the characteristics of tax? What are the objectives of tax? What are the differences between direct and indirect tax? What are the different types of taxes? Canons of taxation. So these are the fundamental basic things every student must know before going in depth into the subject. So watch the video till the end and don't skip in between because this is the fundamental first video. First of all, I'm going to explain you about the meaning of the term tax. Tax is a compulsory contribution. It's a statutory payment made by the people of the country to the government. So first of all, you must remember it's a statutory payment. It is not optional. It is compulsory. It is not voluntary. It's a statutory payment by the people of the country to the government. So Adam Smith have given different definitions and meanings to the term tax from different perspective. From state point of view, from government's point of view, tax is a compulsory payment to be received from the people for day-to-day expenditure. From taxpayer, from the people point of view, it's the coerced payment because it's a forced payment made by the people to the government. Similarly, from the administrative point of view, it is a collection of amount for the people for the common expenditure to be incurred by the government. Similarly, from theoretical point of view, a tax means a compulsory contribution made by the people of the country to the government. That is the meaning of the term tax. Now, what are the characteristics of tax? What are the features of tax? By studying these characteristic features, we can be able to better understand the meaning of the term tax. First of all, imposed by government only. The tax will be imposed only and only by the government. No other authority can impose the tax. The government may be a central government or a state government or a local bodies. So only government can impose the tax. That is the first feature. Second one, paid in cash. The taxes will be paid only in cash, not in kind. So thirdly, aim to promote welfare. One of the main objective of the government is to promote the welfare of the people, well-being of the people. So without imposing the tax, it will be difficult for the government to promote the welfare. Because for promoting welfare, for welfare schemes, the government needs funds. The government will collect the tax in order to promote the welfare of the people. Next one is raising revenue to the government. A government will have so many expenditure to be incurred. So the tax is one of the source of revenue to the government. Through taxes, the government will collect the money and the government can be able to run. The government can be able to spend the money on different activities of the government. Next, legal obligation. Tax is not voluntary. Tax is not optional. It's a legal compulsory payment to be made by the people according to the Constitution. The Constitution have given the power to the government to impose the tax. So once when tax is imposed, it will become a legal obligation on the people. Next, involves an element of sacrifice. A tax involves an element of sacrifice because the taxpayer will not get a direct benefit from the government by paying the tax. When a person pays the tax to the government, he cannot demand from the government that I want this thing because I am paying the tax. No, the government will spend the tax for the common welfare, common benefit to all. No specific benefit to the taxpayer. That's why it becomes a sacrifice on the part of the taxpayer. Involves an element of sacrifice that levied by government by virtue of power given by the constitution. In every country there is a constitution. The constitution will give the power to the government to impose the tax. So government is also not imposing the tax on their own will, but it is the power which the government got from the constitution to impose tax. Next one, not a payment for specific service. When tax is paid, it is not for a specific purpose, but the tax is paid for the common purpose. The government can spend the money on its priority basis. The people, by paying the tax, cannot demand that my money should be spent in this way, then only I will pay the tax. No, the people will not have the right. The people have to pay the tax. The government will decide. And the people can, ask the government to give explanation about their expenditure. Next one is imposed on income, wealth, or a commodity. The taxes are imposed on the income of the people, on the wealth of the people, on the commodities which the people consumes. So tax will be imposed on the income, wealth, and commodities. By listening, by watching this lecture, you will be able to understand the meaning of the term tax and characteristics. You can write an examination excellently. Next comes objectives of tax. So why taxes will be applied? Many non-commerce students like science students or art students or common laymen will ask why the government will impose the tax. We have earned the money. It is our hard work, hard earned money. Why parting our hard money to the government? Why the government is imposing the tax? They don't have civic consciousness. So the objectives we have to explain. We have to explain as a student of commerce, accounts, we know then why the government is imposing tax. What are the objectives? So here the objectives are divided into traditional objective and modern objective. The objectives are traditional objectives, the old objectives. Because remember, tax is not a new concept, it is coming from centuries. Many hundreds of years back, the taxes are imposed by different rulers. So what are the traditional objective? What is the first one? Generate income for day-to-day expenditure of the government. The government has to fulfill a number of statutory obligations, administrative functions, social functions. So many activities are there of the government. Without funds, how the government can be able to complete all the functions? So tax is one of the sources through which the government can be able to fulfill all its functions, statutory functions, administrative functions, social obligations, etc. Next one, provision for basic needs of the people. One of the responsibility of the government is the people must have the basic needs. Nobody should die of starvation. Everybody must have the basic needs. That is the objective of the government. So in order to fulfill the basic needs of the people, the government must have the revenue. And taxes is one of the source of revenue through which the government can spend the money for the basic needs. Next one, to bring socio-economic changes. See, automatically a country cannot develop. We have to bring socio-economic changes in the country. So to bring about all these socio-economic changes, the government needs funds. Technology is fast changing. In this, the environment is completely dynamic. A lot of changes are taking place economically, socially, etc. So the government have to spend the money to bring socio-economic changes. Next one is protecting home trade. Due to globalization, There is a lot of competition between home industries with foreign industries. The home industries, the domestic industries are weak industries compared to foreign competitors. They are strong. So it is the responsibility of the government to protect our home industries from foreign competition. That is also one of the basic objectives. Next one, prevention and control of concentration of economic power among the few hands. There is a tendency, money multiplies money. A rich person will become more richer, whereas a poor person will always remain poor. So there's a huge gap between rich and poor. The government must take some steps. The government must take some steps to remove the concentration of economic power among the few. So through taxation, the government will take the excess surplus money from the rich people and spend the money among the poor, so that the gap between rich and poor will be reduced. That is also one of the objective of taxation. Next one, a good taxation system provides redistribution of income and wealth. See, there are many problems when few people are having more money, more people are having less money. So the government will impose the tax to redistribute the income from different people. Next one is formation of public capital for rapid economic development. See, every country, every government wants to economically develop the country. For economic development, the government needs funds. Capital formation should be there. Otherwise, if we do not impose the tax, if the government will not impose the tax, there is no capital formation. The people will earn the money and spend the money without generating any investment, without, economic development of the country. So one of the objectives of the government is to accelerate the economic development, encourage saving and promote investment. Another objective of the government is encouraging the people to save the money. Because income tax provision says if you save the money, your tax liability may be reduced by different provisions. So when savings are there, investment will be promoted. So these are some of the traditional objectives of taxation. These are the reasons why the government will impose the taxes. Next comes modern objectives, because presently the activities of government of every country have changed. Earlier it was only simple objective, but nowadays the government's objectives, the government's activities have tremendously changed. So modern objectives of taxation are accelerating economic development. Not only to just protect the country, not only just to see the welfare of the people, but also one of the objectives of the government is to accelerate the economic development of the country. The people of the country must have all the facilities. The people of the country must not suffer. So to bring about economic development, the government needs funds. So that is the objective of taxation. Increasing employment opportunities. Most of the countries today are facing the problem of employment. Much unemployment is there in every country. To remove the unemployment, the government is imposing the tax, collecting the money, and with the help of that money, many projects will be started. By starting these projects, the people will get the employment. Employment opportunities will increase by taxation. Next one, reducing regional imbalances. See, in every country, some areas are developed, some areas are underdeveloped. This is called imbalance. Some areas like city areas or urban areas are much developed. Rural areas are completely backward. If the government do not take any steps, there will be a problem, social problem, economic problems in these urban areas, because people are coming and crowding in urban areas. The rural areas always will remain undeveloped. The government imposed taxation. Through taxation policy, this imbalance will be reduced. The government will encourage the people to start the industries, to start their businesses in rural areas, so that rural areas, undeveloped areas should also develop. That is also one of the objectives. Next one is regulation of consumption of certain commodities. See, the people will consume so many commodities, but some commodities are injurious to health and some commodities are compulsory commodities. Example, in case of liquor, in case of cigarette, which are injurious to health. So the government will impose heavy taxes on these items, commodities which are injurious to health, to discourage the people from consuming those commodities. Similarly, some commodities are there which are essential. Example, the basic medicines. The basic medicines which are normally consumed by every person. So if more taxes are imposed, it will be very difficult for the people to buy the medicines. So the government will impose a very less tax on these commodities. So in this way, the taxation can be used to regulate the consumption of commodities. Next one, protection of domestic industries from foreign competitors. Just now I told you, a country, the government has an obligation to protect our domestic industries from foreign competition. Otherwise, what will happen? The foreign competitors, strong competitors will enter the market, enter the domestic market and capture the market. Our country, industries cannot be able to grow. So the government has taken this taxation policy in order to protect the home industries. Next, promoting capital formation. Without capital formation, no country can develop. So by using this taxation, the government can be able to increase the capital formation for economic development. So this discussion explains about the objectives of taxation. Next comes types of taxes. There are different types of taxes. Each one will have their own meaning. So I'm going to explain because in examination they will ask you. And this is the basic knowledge every taxation student must know. First of all, duty. A duty is a form of tax on industrial production and import and export. When goods are produced within the country, the government will impose the tax on the production of goods. Production of goods. Similarly, when goods are imported or exported, customs duty will be applied. When duty is applied on industrial production within the country, it is called excise duty. Excise duty is the duty or tax which is imposed on goods produced in the country. And similarly, customs duty is the tax which is imposed on movement of goods. That means when goods are exported or goods are imported. Export duty, import duty. Next comes cess. When the government collects the tax for a specific purpose, it is called cess. Example, health and education cess. Presently, the government of India is imposing a specific tax called health and education cess. The government is collecting the tax only for the purpose of health and education. Similarly, Swachh Bharat cess. The government is collecting the tax for Swachh Bharat, for cleaning of the country. This is called cess. Then surcharge. Surcharge is a tax on tax. It is a temporary tax which is imposed to generate additional revenue. Sometimes the government needs urgent additional revenue. So for imposing this additional revenue, surcharge will be taxed. Surcharge means a tax on tax. First of all, income tax will be calculated. On that income tax, again tax will be calculated. That is called surcharge. But surcharge will not be applied on every person. The criteria is 50 lakh. If a person whose status is individual, his income is up to 50 lakh, no surcharge will be levied in 1 year. In the current previous year, if the total income is up to 50 lakh, no surcharge will be levied. If his total income exceeds 50 lakh, up to 1 crore, then surcharge will be levied at 10% for the current assessment year. Whatever provisions I am explaining, these provisions for the current assessment year 21-22. So if the total income exceeds 50 lakh up to 1 crore, 10% surcharge. If the total income exceed from 1 crore to 2 crore, it is 15% surcharge. If the total income exceeds from 2 crore to 5 crore, 25% is the surcharge. If the total income exceeds 5 crore, 37% of basic income tax is the surcharge. This is called surcharge. Then octroi. Octroi means it is a tax levied by municipal corporation or gram panchayat when the goods produced from other areas, other states are entering into their jurisdiction. So it is also called entry tax. For example, this state is having, the goods are coming from other states to our present state. As soon as the goods are entering the border of our state, then the municipal corporations, the gram panchayat will apply the tax called octroi tax, entry tax. Next comes terminal tax. Similarly, when goods are leaving from one area to another area, the municipal corporation, gram panchayat will impose the tax called terminal tax. Last one is toll tax. It is the vehicular tax which is imposed on cars, buses, jeeps, trucks, etc. when moving from one place to another place. When these vehicles are moving from one place to another place, they are using the roads. So a tax will be imposed on vehicular traffic, that is called toll tax. So these are the different types of taxes. The next is classification of tax into direct tax and indirect tax. So taxes can be broadly classified as direct tax and indirect tax. Direct tax is a tax which is imposed on a particular person. He alone or she alone must pay the tax. The person cannot shift the burden of tax to any other person. That is called direct tax. Example of direct tax are income tax, wealth tax, or profession tax. This is a tax which, when imposed on a particular person, he or she alone must bear the burden. They cannot shift the burden to any other person. That is called direct tax. Indirect tax is a tax on commodities, on goods. The indirect taxes are imposed on those commodities or goods which are consumed by the people. If the people are not consuming any goods or services, no indirect tax. So indirect tax is a tax which is imposed on a particular person, but burden will be borne by another person. Paid by one person, but borne by another person. That means the responsibility is of one person, but ultimate burden will be on another person. In case of direct taxes, both payer and the person who is bearing this tax will be one and the same. But in case of indirect taxes, payment is made by one person, but ultimate burden will be on the head of another person. That is indirect tax. Example of indirect taxes are sales tax, excise duties, customs duties, or GST, goods and service taxes. These are the examples of indirect taxes. So in examination, you may be asked the differences between direct taxes and indirect taxes, merits or demerits of direct taxes. So indirect tax, direct and indirect taxes differences are: first difference, direct taxes when imposed on a particular person, he or she alone must bear it. He or she must pay it. They cannot shift the burden to any other person. Whereas indirect taxes, it will be paid by one person but borne by another person. The direct taxes are on income or wealth of a person, but indirect taxes are on goods and services. Next one is on direct taxes. Direct taxes, when the payment is to be made and how much payment is to be made, will be clear in the mind of the taxpayer. Whereas indirect taxes, the government is not sure when the people will consume the goods. If the people consumes the goods, they have to pay the tax. So whenever they are purchasing, they are using the goods, they have to pay the tax. Next one is direct taxes. There is some civic consciousness among the people, because when the people pays direct taxes, he will feel the pinch of paying the tax. Whereas in case of indirect taxes, the people will not feel the pinch, because the indirect taxes are included in the prices of the goods. When we purchase some goods, The price of the goods includes the cost price, the profit margin, and also the taxes. But the people will not feel the pinch because they'll say that I am paying only for the price. But price includes tax. It is sugar coated. So that's why there is no civic consciousness on payment of indirect taxes. Indirect taxes. So many differences are there between direct and indirect taxes. Now, canons of taxation. Canons of taxation are the directive principles which are followed by the government in making the taxation policy and imposing the tax. So before imposing the tax, before making the taxation policy, the government has to follow some basic principles, directive principles. Those directive principles are called canons of taxation. So Adam Smith have given different canons of taxation. Every government, while imposing, they have to follow these principles. First one is canon of equality. Equality does not mean that equal tax will be applied on everyone. Equality here denotes higher the income, more will be the tax. Lower the income, less will be the tax. No income, no tax. That means the tax should be equivalent to his income. So higher income people will have to pay a higher amount of tax. Lower income people have to pay lower amount of tax. Tax should not coerce the people in making the payment. It should be convenient. So equality means higher income people, more tax. Lower income, less tax. Canon of certainty. The person paying the tax must be certain about how much tax should be paid, when it should be paid. It should not disturb his life. It should not make irritation or frustration among the people. It should be certain. The taxpayer must be clear in his mind when I have to pay the tax, how much I have to pay the tax, how I have to pay the tax. Everything should be clear, certain. Next, canon of economy. Canon of economy says the cost incurred in collection of tax should be minimum. What is the purpose? If the collection charges are more than the tax itself, the government is spending 50,000 to collect the tax of 40,000. So what is the purpose of collecting this 40,000? Because we are incurring 50,000 in collection. That is uneconomical. So the taxes should be economical, means the cost of collecting the tax should be minimum. Then last one, canon of convenience. There should not be any inconvenience on the part of the taxpayer. The taxpayer should not feel much pinch of paying the tax. Honestly, with happily, the taxpayer should pay the tax. There should not be any burden. There should not be any disturbances in the life of the people in the form of tax. So these are some of the canons of taxation. In examination, question may be asked regarding explain the canons of taxation. Last thing I want to explain in this video is regarding tax structure in India. The tax structure in India is of threefold. The first tax are the taxes imposed by the central government. Then second one, taxes imposed by the state government. And thirdly, taxes imposed by local bodies or municipal corporations. So complete detail has been given by Income Tax Act regarding what are the taxes which are imposed by central government and what are the taxes which are imposed by state government and what are the taxes to be imposed by local bodies. First of all, taxes imposed by central government. Income tax, wealth tax, goods and services tax, and then excise duty, import duty, export duty. These are the examples of taxes which are imposed by central government. Then what are the taxes which are imposed by state government? The state government will impose professional tax, entertainment tax, taxes on agricultural income. Then apart from that, GST, goods and services tax, sales tax, terminal tax. These are some of the taxes which are imposed by the state government. Local authorities, municipal corporation, gram panchayats, these local bodies will also apply the tax.